Greetings, everybody. Bill Moore here, and we're going to find us a pair from the end of day data on Friday, the 8th of March. And once again, we're going to be using the 11 baskets that are components of the sector ETFs that we've been using this week. And I have done the analysis already. That takes about an hour and a half. I mean, I say I've done it, the computer does it. But that's done, and I've taken a look, and we found a couple of good ones. The filters were very similar to previously. We've got a 0.8 correlation, 0.8 RW coefficient, and it has to be at least 1.25 standard deviations away from the mean, after which I then used a filter to make sure the expectation value was at least a 5% for a long up and 5% down for a short. Given all that, we found a couple of interesting ones. So far in the past week, we did not use anything from either the consumer staples or the consumer discretionary groups, but I found one of each. We're going to take a quick look at both of them, but we'll have to make up our mind which one we like. So let's start with Costco versus Cisco. This is in consumer staples. So overall, the motion is not bad. It had some pretty extreme jumps. What is this, about November? So a few months ago. And it's been moving back down, but even as it's moving down, it's jumping around pretty nicely. So that's a reasonable picture. This back testing, it has been outside the second standard deviation 7 times and returned to the mean profitably every time. So great track record, a really, really good track record. Let's go ahead and move over here. I've already added it to the observe page. Okay, so we had a jump up here, and we'll go take a look at that in a minute if we think this is the one to go. The motion is still up, but notice that they've had gaps. This pair has had gaps quite a few times, right? And still been successful coming back to the mean. So I'm pretty okay with that. But let's take a look at hitting probabilities really quickly. Let's see here. No, where are we? Okay. So pretty strong on the mean reversion. That's a nice slope down. Let's run the simulation. It's currently at 19.46. Obviously, this is a short. So look at this. This thing has been very, very strongly mean reverting, and it is basically saying it's going to be below that number 30 days from now. It's our target price of 3.06. It says half the time in only 2.5 weeks. So those are very strong numbers. Let's go take a look at the other one. The other one was from consumer discretionary, Dollar General versus Lowe's. And it also has a nice motion like this. It's had a slight upward drift. And let's see, when did it have its big move? It had its big move up, in October, right? So 4 months ago. But even again during that time now, it's possible that it's setting a new trading range. But even if it's setting a new trading range, it's still got a nice motion here. So let's take a look. Okay, so it's been outside the second standard deviation 8 times. It's returned profitably to the mean 7, and the only reason it's not 8 is because the most current one is still open. So in fact, all of the times that it's made it back to the mean, it has been profitable. So very, very well behaved also, like the other. Let's go take a look at it quickly over here. So I'm okay, again, still moving up slightly. Let's take a look at the hitting probabilities on this one. Very strong mean reversion. Run the simulation. We're at 1535, again a short. Now there is a little difference here. This model is not as confident as the other. Now 86.8% of the time it says we're going to be below the current price in 30 days. That's good, but not as good as the other one. And here half the time in 46 days or less, and that was only 16 on the other one. So the mean reversion looks good. The charts look okay, but the strength, the model is suggesting that the other one might be a slightly better fit right now. So probably we're going to make that one be the recommendation for today. Let's go take one more quick look at it. So again, a lot of gaps in here, and we've just had a gap. Maybe we should go take a quick look and see what that one did. So this is what happened, or at least this is the action that we see in the chart. Costco had a big jump up. Let's see if we can figure out why. Strong earnings. Okay, so they had a good earnings report. They had a nice leap up, and that created this picture. You can see the jump up right here in Costco, and that created this picture for us because Costco is the long side of our pair. But once again, I'm looking at this chart. This has happened numerous times. Numerous times all of the past 7 or 8 months, and still the record is perfect as far as getting back to the mean profitably. So I think we're going to make this the recommendation of the day. Today we're going to recommend Costco minus 3.17 shares of Cisco, and it is a short. So for every share of Costco that you sell, you're going to buy 3.17 shares of Cisco. Good luck with your trading.